years of being a part of country's EV revolution, Ather Energy is now gearing up for its biggest test yet, the IPO. Joining me now are the founders, Tarun, Mehta and Swapnil Jain. Thank you so much for joining us on CNBC-TV18.
Thank you.
I think the first question when an IPO comes on the block is a very obvious one, which is path to profitability. Is there a realistic timeline on breaking even?
So, path to profitability is basically two levers, your unit economics and then scale, which is the operating leverage. I think if you see our updated numbers till December, you will notice we've done a tremendous job on improving our unit profitability, gross margins. They've gone from 9 to 19, so they've scaled up really well. And this is down to some amazing work done by our teams on value engineering and a great job done by our sales system on the right kind of SKU mix and product mix overall. The second part of this equation is scale. Again, on scale, you will notice we've grown very healthily in the last 9 months, and this entire year looks like a great growth here. And what's ahead of us on both these axes is a lot of potential cost improvement on the back of our new platform, on the back of the transition to LFP batteries. And on scale, there's a tremendous lever of new stores and expanding our distribution that's ahead of us that we're very excited about. So put these two parts, we've done a good job with both. And there's a very strong outlook on both, which is why we think the path to profitability is at least clear now. And you will also notice that EBITDA has improved quite a lot in the last couple of years.
But with FAME 2 subsidy hitting pretty hard, the entire EV sector, especially the two-wheeler sectors, the two-wheeler market, how do you sort of future-proof yourself with these policy changes? Because policies are dynamic in this sector yet.
I think the bad thing and the good thing that's happened with subsidy is that the bad thing is that it's come down, and the good thing is that it's come down. So now the overall reliance on subsidies has reduced for the industry, so the overall impact is not that high. Like 2 years ago, this would be a massive lever. If anything happens to them, this would change our financials massively. But now we've come to a point where subsidies are going to soon become something like 3% of the revenue. So while that makes our job harder, but in a way the company and the industry is better prepared for it. What can you do to better prepare for it? There's a lot of engineering. Our teams have been focusing on taking cost out. In fact, I think that continues to be one of the largest focus areas within product development overall. A lot of work on supply chain resilience and domestic sourcing. So those are things we've done to, in a way, future-proof ourselves against further subsidy reductions.
One of your biggest backers is, of course, MotoCorp. How do the synergies work here, considering a legacy player is backing and betting on an up-and-coming company and a sector for that matter? Where do you draw the line? How much of, what is the sort of share percentage, if there's any?
Share percentage of?
If there's any like tech percentage that you're sharing with them, or are you helping them out with anything?
No. Ather and Hero are two completely different platforms, if I were to describe them that way. They're very unique and strong advantages that Hero as a business has with their motorcycles, with their now expanding international, with their focus areas. The customer is very different. With us, our product, our DNA, our sales system, our customer focus, they're very different. So it kind of makes sense for us to build these businesses out differently instead of trying to find synergies. We've looked at synergies, and there are a few like in charging infrastructure. But at the product level, at the sales level, we've realized it's better to build businesses differently. Hero has been a fantastic partner in our journey over 8 years. They've been our biggest backer, and Dr. Munjal has been a great support over the years. But ultimately, the business has to be built out.
I'm sure you get this question a lot because with the release of the DRHP, they're not participating in the OFS at all and only going around ramping up their stake in the company. What's the future like? Is there an acquisition on the cards? Is there a merger on the cards? What would the future be like, or is it never a possibility?
Honestly, if M&A was the way forward, us spending all this time taking the company public is a bit of a tangential journey then. It would be far better if you want to pursue that path. Instead of us spending so much time with them building their EV business out, us building our EV business out, would actually be a fairly counterproductive exercise in a sense.
Top tech features of Ather that sets you guys apart from an Ola or any other EV in the industry?
So actually, we are all along our focus has not been about paper spec. It has always been about the depth of every feature which we offer. May it be the auto hold feature, may it be the maps. For example, we've been very clear that we will not move on to some other maps platform, because maps is not like a checkbox of a feature for us. Google Maps works best for customers, and that's why we will provide only Google Maps. So it's similarly on auto hold. It's not about, okay, can your vehicle hold, but how long can it hold? Can it hold for a half a minute, or can it hold for 2 minutes? Can it hold with one rider, or can it hold along with the pillion for 2 minutes, 3 minutes, 5 minutes of sort? So all our features, auto hold, or even a Bluetooth stack where your phone and your vehicle and your helmet sort of pairs together. We believe in depth of features than just the checkbox of features. Ecosystem is always going to be our strong focus, because I mean that's inherently an EV enables that, and we also believe that we have to stop looking at just vehicle and look at there are a lot of ecosystem products around the vehicle, and they really enhance the ownership experience of the product.
This IPO is coming at a time when not just the market is struggling, but also EV sales are going through a slowdown in the country. How do you peg this double whammy of a situation?
I think we get too distracted, and it's funny you talk about the markets and EV sales month on month, because I think we get too distracted with this myopic view of monthly numbers. So markets in October are the greatest market ever, markets in Feb are bad, and last week now was the best week ever, and everybody gets too distracted with it. Even EV sales, if you look at an annual level, or even if you look at a quarterly level, have been on a great path of growth. FY24 looks like a healthy amount of growth over FY23. Calendar 24 was a solid amount of growth over calendar 23. So we shouldn't read just weekly or monthly numbers. See how the entire picture is emerging. Tier 3 towns, Tier 2 towns in India are electrifying at a rapid pace. Scooters continue to win over motorcycles. Electric scooters are growing much faster than than petrol scooters. I think there's a tremendous area of growth. I think the outlook is beautiful over the next few years. The TCO makes a phenomenal amount of sense for an EV buyer with a scooter. We are focusing on the premium and upgrading customer, which we believe is the strongest growth category over the next few years. And for us, particularly, the story is very, very exciting, because we've just launched a second product which has seen tremendous response with Ather Rista. So obviously, it's going to drive a lot of growth in the near term. EL platform is coming in very, very soon ahead of us. That's going to drive a lot of future products for us. And then finally, distribution. There are hundreds of cities where Ather is still not present. Opening our stores there finally this year, next year, is going to drive a lot of growth. So I think we are bringing our issue to the markets at a time when we've proven our brand with Ather 450. We have shown the promise with Rista. There is the future promise with more distribution and the EL platform, the new platform. And the industry continues to grow at an annual level very healthily. We love the timing.
But what are you, if I could frame this better, when we speak of markets, we saw Ola come down from a peak of $7 billion to now almost 65% from its peak ever since it got listed. Markets haven't changed much, and we saw that with your valuation also coming down from 20,000 to 14,000. Where's the confidence coming from, and are you exactly confident to go forward with this?
We are not trying to time the markets here, and actually I will say the same answer all over again. We are not trying to time the markets here. Pricing is ultimately a factor of where the larger indexes are and where the larger market is. What we believe is, what we've seen is tremendous amount of demand and excitement for our brand and our company. We've been building it solidly for the long term. There's a solid view, there's a solid focus on profitability. If you notice our EBITDA numbers quarter on quarter, we've improved them significantly. We're not a company that's just trying to grow top line at the expense of every other number. In fact, many of you have asked me the same question. Why not just sell more products at a lower price? We've not done that because we also have kept our eye on profitability. Ultimately, I think the market will reward strong, profitable, sustainable growth with a company with high governance, which is what we're trying to build at Ather. So we're very bullish on market, on our long-term prospects. And the pricing, exact timing of the market, I think that's, nobody can predict that. It's fine.
Thank you so much for joining us today on CNBC-TV18, and good luck for the IPO.
Thank you.
Thank you.